Hi, welcome to Curious Bricks. Last week we talked about UPS. Today we're going to talk about UPS' biggest competitor, FedEx, ticker symbol FDX, Q2 2021 earnings report. FedEx is part of S&P 500 index under the industrial sector. The company's earnings call was hosted on December 17, 2020. Since this is our first time covering FedEx, we will start with a quick overview of what FedEx does and how they make money. FedEx is one of the largest logistics companies globally. It was founded in 1971, and its fiscal year 2020 revenue was around $69 billion. The company's business is divided into four segments: FedEx Express, FedEx Ground, FedEx Freight, and FedEx Services. FedEx Express is a $36 billion revenue segment, which offers time-definite delivery of package and freight to more than 220 countries. This segment acquired the assets of TNT Express in 2016. FedEx Ground is the second largest segment with $23 billion revenue. This segment offers small package ground delivery services in North America. SmartPost is one service that specializes in delivery of high volume, low weight, and low time sensitive B2C packages. FedEx Freight segment is a leading less-than-truckload service provider in North America. Lastly, the FedEx Services segment serves as a shared services group that supports the other three transportation segments. FedEx competes with national postal offices along with global and regional logistics companies. Before we dive into the financial details, let's take a quick look at some key statistics. As of January 8, 2021, FedEx share price was $245, and its market cap stands at $65 billion. The trailing price-earning ratio is around 26.5. Forward dividend is $2.60 per share, or 1.06% yield. As of December 15th, the short interest of total floating share was only 1.2%. Now let's take a look at their latest quarterly financials. We will start with the income statement. In Q2 2021, FedEx reported a total revenue of $20.6 billion, which is 19% higher than the same quarter last year. Revenue growth is driven by the strong result from FedEx Ground. All three transportation segments posted year-over-year operating margin improvement, while FedEx Freight has the best Q2 margin in 15 years. In summary, FedEx reported total operating income of $1.4 billion, or 164% higher from a year ago. FedEx also published the detailed revenue breakdown for its Express segment. While the segment had a solid 14% year-over-year growth, international growth rebounded with strong momentum in the third quarter of the calendar year 2020. Now moving to the balance sheet, FedEx increased its cash on hand by $3.4 billion to a total of $8.3 billion, while long-term debt increased by $1.2 billion to $23.2 billion from 6 months ago. Overall, FedEx liquidity looks healthy. In this quarter, the management shared similar market commentary as UPS. The acceleration of e-commerce remains strong. E-commerce grew 33% year-over-year in the first 9 months of 2020. E-commerce volume is expected to reach above 111 million units per day by 2026, up from 35 million in 2019. Similar to UPS, FedEx also expanded its weekend service. The expanded Sunday residential delivery reached to nearly 95% of U.S. population. ShopRunner acquisition was announced at the beginning of December and is expected to be closed soon. Lastly, industry capacity remains tight. FedEx is prioritizing business from small and medium customers and reprioritizing any volume from resellers. Yield per pound will become an increasingly important metric. During the Q&A session, several analysts were interested in the future margin outlook for FedEx Ground. The management responded that the company incurred a lot of incremental expenses in this quarter, such as hiring extra handlers and drivers and purchase new trucks. New sorting and package facilities were also delayed due to COVID. These contributed to the increase of operations expenses. However, the insourcing of SmartPost volume will drive down the fixed cost. yield in the residential business is also improving. The management expects the margin improvement for FedEx Ground to continue year over year in each of the next 2 quarters. One analyst also inquired about the future play of the ShopRunner acquisition. The management envisions 3 benefits from this acquisition. First, FedEx's existing logistics capability creates greater certainty with the existing ShopRunner offering. Secondly, ShopRunner's order data allows FedEx to see upstream activities. Thirdly, FedEx could enhance the post-purchase experience to customers. The next question is related to the near-term view of the different end markets. E-commerce is the fastest growing segment. Industrial production and business segment is just recovering. Inventory to sale is at all-time low for retail and 6-year low for manufacturing. On the international segment, FedEx charges a premium for its capacity. The company sees early signs of recovery from Europe. The recovery mainly comes from B2C market. One other question is related to the CapEx plan for fiscal year 2022. FedEx will invest heavily on the last mile space. The company plans to build more smaller automated satellites and station and regional sortation facilities. Now let's take a look at FedEx stock performance before and after the earnings call. FedEx reported revenue of $20.6 billion, beat analyst expectation of $19.5 billion, and its adjusted EPS of $4.83 also beat consensus of $4.01, but the market had a negative reaction after earnings announcement. Lastly, here is the latest summary of analyst ratings of the company. As of January, there were 28 analysts covering FedEx. Nearly half of the analysts gave the rating of buy, while the remainder gave the rating of strong buy and hold. If you are interested in knowing more about this company, I recommend you conduct further analysis of the company's public filings. Thank you for watching this video. If you like this video, please subscribe to our channel.